Assalamualaikum and good evening to Dr. Rosmina and my friends. Today, my group will present about adoption of the fintech service in Malaysia and its potential impact to the accounting profession. He is my group member, Azmi, Najibi, Huda, Balkis, and myself, Iman. There are three parts of our presentation today. First, we'll talk about introduction of the fintech. Next, evolution of fintech, how fintech is working, who use a fintech service, type of fintech services, fintech company, regulation of fintech, problem and issue in fintech. Next, fintech in Malaysia, and lastly, how does fintech affect and impact to the accountant. First, introduction. So, what is a fintech? Fintech is a combination words of the financial and also technology. The new financial industry that apply to improve a financial activity, and according to the FSB, they define fintech as technology that enable innovation in financial service that could result new business model, application, process, or the product. There are many fintech infrastructure. Here is some of it. Example, payment, crowdfunding, investment, digital banking, P2P lending or peer-to-peer lending, blockchains or cryptocurrency, insurance technology, and regulation technology. What are we expecting in fintech? We expect fintech to revolution more innovation between our life and habit by making financial service more simple, transparent, effective, and time-saving. Next slide is about evolution of the fintech. We talk about evolution more about the history of the fintech itself. There are four eras of the fintech: 1.0, 2.0, 3.0, and lastly a 3.5. Each of the era have the different key elements. For example, 1.0 more about infrastructure and computerization because this is the first time fintech was introduced. 2.0 about the traditional or the introduction of the internet banking. 3.0 and the 3.5 more about mobile, startup and new entrants or new emerging market. Okay, 1.0. This is the first we can talk about financial globalization. This stage entails constructing the infrastructure required to support a globalized financial service. It began with the technologies such as telegraph, payroll, and streamsheet that enable first rapid transmission of the financial across the border. So the first transatlantic cable, 1866, and feed wire, 1918, in the US, enabled the first electronic fund transfer system using technology such as telegraph and the Morse code. Then it can be said that while just a type of this type filter may not be considered today, however, at that time they are relevant. Next, this 2.0 is about the transition from the analog to digital, which lead by the traditional financial institution. The installation of the first ATM in 1967 marks the beginning of this phase, which are categorized by this transition from analog to digital finance. Fintech 3.0 is about about the emerging a new player alongside with the existing company that are already in the market. Because this combined with the fact that many financial professionals were out of the work because the paradigm shift and pathway to the new industry 2.0. Because this era we can say distinguished by the emerging of new players alongside with the existing ones such as banking, start with a new startup to emerging and well-known established technology company begin to provide financial product and service to the business, bank or into the individual. Lastly, we'll talk about 3.5 more about the emerging market because 3.5 can be defined for the change in consumer behavior and how they access the internet in developing world. Because we can say that in this era, how the government policy, how the new fintech was introduced to come up with new solutions and more updated fintech technology. Next, about how fintech is working. Basically, at the surface, fintech is referred to the back-end technology system of the financial institutions. That include activities such as international money transfer and depositing check using smartphone. However, the industry change, the technology more innovations, so the definition itself was changed. So now it's more about compass the several applications that are based on a consumer base, and the scope of the term broadened to include the sector like financial education, retail banking, fundraising, and non-profit and also investment management. The fintech is working by basically by eliminating a process, because broadly speaking, fintechs are strive to simulate the transaction process by eliminating potential unnecessary steps for all involved parties. For example, mobile service like Venmo or Cash App allow you to pay to the others directly, sending funds at any time, at any day. However, if you pay using the cash or using the check, you need a time to go to visit to the banks, and it's costing a lot of time. Therefore, the fintech is simplify financial transaction for the consumer or the business or to the individual by making them more accessible and generally more affordable. Okay, that's all from me. I will pass to the next presenter.
Now, I would like to present who uses fintech services. As we know, fintech now refers to a wide range of financial activities that can be performed alone without assistance of a person. According to that, fintech users fall into four broad categories. The first one is business to business for banks. These solutions enable banking services to be incorporated directly into a customer business owned platforms by providing a simple method of payment and data transmission among a bank network. Secondly is business to business for their business clients. B2B customer service is the support or guidance provided by a B2B to another firm that uses its service or product. Next, business to consumer for small business and business to consumer for consumers. Both terms refer to the process of selling things and actual services between a company and the end users of its goods or services. In terms of consumers, like with most technologies, the younger you are, the more likely you are to be aware of and properly define fintech. It is also due to the size of that market rather than the capabilities. Before the development of fintech, a company owner or entrepreneur might have turned to a lender to seek finance or starting money. Through digital technology, those barriers are no longer an issue. Next, I'll continue with this type of fintech service. Firstly, a digital payment, often known as an online transfer, is the transmission of value through the use of an online network medium. There are several fintech companies that develop payment activities like MallPay, ManagePay, and BillPlease. MallPay offers a comprehensive range of payment options and domestic online banking, while ManagePay manage end-to-end electronic payment services to banking institutions, retailers, and card issuers. The second leading one in Malaysia is e-wallet. It is a form of electronic card that is used for online transactions using a web browser or a mobile. Software and information are the two fundamental components of an e-wallet. The software component maintains personal information and offers data protection, while the information component is a collection of information provided by the user. Alipay, Boost, and Touch 'n Go are examples of fintech startups for e-wallet. The third service is lending. The online lending process is a set of procedures used by a financial institution to make loans available online. It consists of three components. Firstly, a procedure for calculating the user's creditworthiness and loan limit. Secondly, a mechanism for disbursing loan funds and collecting repayments. Lastly, a collection agreement used to reclaim outstanding payments. Capital Bay, B2B Finpal, and direct lending are examples of lending services. The last one is remittance payment. One of the most significant benefits for foreign remittance is speed, as it allows consumers to select an expedited delivery mode which further expedite the transfer procedure. Moreover, fintech also avoids collecting additional costs like alteration fees, service charges, and other hidden costs, result in a reduced final cost. Next, it provides multiple ways to send remittance, such as transferring funds across borders with an internet-enabled smartphone, as well as making legal remittance over the phone with currency brokers. E-remit, money match, and TakeFX are examples of lending services. That's all from me. I'll pass to the next presenter. Thank you.
So now I will explain about the top fintech companies in Malaysia. According to the Malaysia Fintech Reports 2021 published by the Fintech News Malaysia with reference to statistics obtained from the Central Bank of Malaysia and the Securities Commission Malaysia, the number of fintech companies in Malaysia had reached 233 companies in 2020. And one of the top company is Synergy Technologies Sdn Berhad. Synergy Technologies facilitates in driving goods of digital assets to creations of solutions and services. And this Synergy Technologies is the only Malaysian homegrown crypto exchange that was recently granted conditional approval by the Securities Commission Malaysia. Another top Malaysian fintech companies is Fundastic. It is a homegrown peer-to-peer, which is the short form is P2P, financing platform licensed by the Securities Commission Malaysia. They are more focusing on crowdfunding platform to obtain funding for everything from social entrepreneurships to small tech startups to art, game, design, music, and more. Beside that, we have IP88. IP88 offers a range of e-commerce and online payment services to merchants across the world. Currently, they are leading online payment services provider in Southeast Asia. Hence, they support comprehensive online payment modes and multi-currency processing. Last but not least, Policy Street. Policy Street is an insurance technology company which customizes and offers insurance to individuals and businesses. It is the first homegrown insurtech to be awarded a financial advisor approval by Bank Negara Malaysia, which enables this firm to give unbiased insurance recommendation and financial planning services. Next, I will be explaining about the regulations of fintech. Basically, in Malaysia, there is no specific legislation governing fintech's company to be followed and complied. Thus, this company will rely on the existing legislations and applicable regulatory framework according to the traditional financial services in Malaysia. This is related to the nature activities of the particular fintech company, such as their business operations and types of product or services that they offer to their clients and customers. This is pertinent to conduct a thorough analysis of the activities in order for them to determine which framework will be applicable and applied. As you all can see here, for instance, if a fintech company carries on any regulated activity which are involved as such activities, banking, investment banking, insurance, or takaful, payment system and payment instrument or any related activities under these two X. Thus, a fintech company must observe and comply with the relevant provisions under the FSA, IFSA, and MSBA, which are under the BNM's Bank Negara Malaysia's administrations and supervision.
We'll continue with problem, challenge, and issue in fintech. So the problem or issue in fintech is firstly data security. So data security has become a major concern in the online world, whether it is mobile banking, payment apps, or fintech in general. This is due to an increasing number of cybercrime as the use of fintech also increasing significantly. Unfortunately, fintech frauds also are one of the most common target for hackers. Second is keeping up with modern technology. So companies which use all business management application or different system will be unable to keep up with a system that is uh, increasingly focus on digital technologies. Moreover, the initial transition to such technology involves high cost and risk. Next is quality of product. So a successful fintech startup cannot exist without strong IT resources. This is because digital transformations makes company more dependent on their software product, which is shifting focus to fintech innovation and development. Lastly, government and industry regulation. So finance is one of the most regulated industry, as there are an increasing number of policies that bank and credit union must follow. So the compliance can place great pressure on fintechs, bank asset, and it frequently depend on the capacity to correspond data from multiple sources. So we move on with the fintech in Malaysia. Firstly, the use of digital banking rise significantly due to pandemic. So basically, COVID-19 have shifted direction of digital transformation journey, which causing all business and organization to upgrade their digitization initiative. There are a growing demand for e-commerce, e-wallets, and cloud storage as it can improve our quality of life. So, Bank Negara also introducing an online banking framework to continue encouraging the development of the digital economy. And lastly, this will provide Malaysia brands being influenced by digitalization, which has contributed significantly to the development of the nation's digital
I will
economy.
continue the presentation with effect and impact of fintech towards the accountants. First and foremost, fintech has replaced a lot of the hard administrative labor of accountants with more deep diving strategic thinking, forecasting, and consulting. Next, now accountants have the time and mental space to take a more analytical approach to their work. And furthermore, fintech has replaced the bookkeeping with automation, which has resulted in reducing the involvement of accountants. Next, in order to satisfy their fintech clients, accountants must constantly strive to become a more lean, faster, and transparent firm. Other than that, accounting is no longer requires a large amount of time to complete their work. It is because the job can be done with the help of algorithms, which is with a few mouse clicks and with high precision. And moreover, profit and taxes are now being calculated using software. Next, the outcomes of accounting are available in real time since it is done in conjunction with the occurrence of business transactions. Accountants are now devoting more time to determine the cost-effectiveness of accounting data. Moreover, fintech has evolved and made things easier on regulatory compliance. Fintech has altered compliance from a large regulatory team to a subscription to high-end softwares. And lastly, accounting consultation process has been comprehended and assessed online. Solutions are created on the spot, negotiated and implemented. The data is available to the consultant with the sharing of credentials, allowing the consultant to access the data stored in the cloud. That's all from us. Thank you.